Hello and welcome to this very special edition of Indianomics, which comes from the sylvan surroundings of the Neemrana Fort, where the NCAR is holding its annual economics conference. I have with me Professor Barry Eichengreen, the Professor of Economics at Berkeley University, who has just presented an excellent paper on public debt. Professor Eichengreen, thank you very much for joining me. I will discuss public debt and the way fiscal deficit is growing everywhere. But first, the more immediate issue of the way in which the FOMC, or rather the Federal Reserve, has given a dovish pivot. It looks like the Fed is backing a soft landing in the United States next year. What is your own opinion of macros next year for the US economy?
I think the Fed is betting on the inflation problem being over, and I fear that it may be premature, that consumer expenditure inflation is still running at close to 3%. There's no guarantee that it will be down at 2% anytime in 2024. So I would have preferred a more studied, ambiguous press conference by Chair Powell. On the soft landing issue, so far so good. There is no recession in the United States. We had a good 2023, and we can hope that the economy will continue to gradually cool, that the employment reports will remain positive, but less dramatic than they've been in the past. There's no guarantee of that soft landing. There's only the hope.
So how do you expect the macros to pan out? You think growth will be good, but rates and inflation and therefore rates will have to stay high? I
think rates are likely to stay high for longer. The Fed will cut less than the markets are currently expecting, except in the still somewhat unlikely scenario that we do go into recession in 2024, in which case all bets are off. The Fed will definitely cut. But I hope that we will continue to have an expanding economy in the U.S. in 2024 and higher interest rates than the markets currently incorporate.
Okay. I'll come back to the impact on India in a bit, but the second major economy, China, how do you see that one panning out? You think it will be adding to global economic growth or detracting from it next year? I'm just getting a picture from you as to the global economic growth next year.
As we speak today, the latest Chinese numbers have been quite positive, but that reflects the fact that they were so bad a year ago. So the change from 12 months past until today looks quite impressive. Nonetheless, I think Chinese growth is disappointing. It will continue to disappoint. China won't detract from global growth, but it will contribute less than it has in the past. I think China will be lucky to grow by 4.5% in 2024.
Okay. So what's the lesson for India? We have an economic growth of probably 7% this year, and the forecast is 6.5% next year, because they're giving allowances for slowdown. But do you think global growth could be a lot slower, or do you think we can bank on only a slightly slower global economy?
I'm hopeful that it'll be only a slightly slower global economy because the U.S. will continue to grow. But you have to weigh on the other side of the scales that China will be growing more slowly and that Europe is clearly going into recession now. India is not a big-time exporter. Domestic demand, domestic spending is very important for India. So I don't think that slow global growth will really weigh on the Indian economy.
Okay. Well, let me come to a slightly medium-term story. As you discussed in your paper just now, fiscal deficit is growing. I mean, United States at 8% and unlikely to lower anytime soon. And likewise, in India as well, we have a very high fiscal deficit. How do you see this impinging on growth? Do you think this will mean that this is going to be a decade of high inflation because of high fiscal deficits?
I don't think it will be a decade of high inflation. Central banks have really demonstrated their commitment to their inflation targets, both the Reserve Bank and the Fed. But I think the fact that more resources are being devoted to debt service will leave less for infrastructure, education, climate change abatement, both in the US and in India.
Okay. But what about India's fiscal deficit itself? Do you think we can get away with this kind of high fiscal deficit, or do you think we will, be forced to spend more on interest, or there will be less faith in Indian debt? How do you think this fiscal deficit will be impinging on growth?
So India's public debt is high relative to that of other middle income, other low middle income economies. India does pay a lot in terms of debt service, but it's also growing the denominator of the debt to GDP ratio. So less debt would be better, no question about it. There would be more public sector resources for education, climate change, and so forth. But I don't think India has a debt disaster looming. It can live with the status quo.
What about the other side? Let me just turn the question on its head. We will have to bring down fiscal deficit. We brought it down from 6.4 in FY23 to hopefully 5.9 this year. But that's still very high for just the central government. If you add the state government, it comes to 9%. If we reduce that, do you think it can have a big impact on growth? The last 4 years, growth has been 7% plus, but that's because deficit has been 10%. If we reduce it, do you think it can have a deleterious impact?
Well, I think less government spending offset by more private sector investment can keep growth going at current rates.
Well, hold that thought, Professor Eichengreen. I have to take a commercial break. But we are back with lots more questions to Professor Eichengreen, especially on artificial intelligence, climate, the role of the rupee and the dollar in international trades. All those questions coming for you in just a minute after this break.